Good morning. Good morning, everyone. Good morning, Abhay. Good evening, Prabhat. Good morning, Ronak. Good evening, Mukti. Good evening, Shikhar. Good evening, Ajit. Good evening, Satyajit. Good evening, Gaurav. Good evening, Rakesh. Couple of minutes and then we'll start the class. HR Central Employee. What is HR Central Employee? We are talking about SAP R3. This is SAP Business one. Oh, that's a different thing. You're putting that with SAP R3 or ECC. They have this concept of good evening, Birendra. Good evening, everyone. One more minute, and then good evening, everyone. One more minute, and we will begin the class. Good morning, Sunny. Good evening, Krati. And before we start the class, anybody has any questions? So, any question at all? Anybody has any question? Whatever we've discussed so far. Good evening, Manjul. Okay, so let us begin. So yesterday, what we discussed yesterday, so let us briefly, we talk about what we discussed yesterday, okay? So yesterday, we basically talked about a concept of service module. So what does service module do? How does service module work? And also, what is the service module is all about? Service module, which we discussed yesterday, was related to how we can take care of after sales service issues. Yeah? Which basically means when you sold the product, many times we have warranties. And we have a service contract. And then many times, a lot of these customers or also calls us and they have a problem, there's issues, and we need to solve them. So in that, what we did yesterday was we created a finished good, for example, FG11, and in that finished good, we have created, for example, like an AC system, air conditioner. Then we created a stock in which we created a purchase order, we created a good receipt, we verify the stock. And what we did yesterday was that in this material, we created with a serial number. This was with serial number. And then we also did, when we verify the stock, we verify the stock with the serial number. Because when you're doing after sales service, serial number is one of the important parameters. A lot of people do use serial number quite a lot into that situation. And then also what we did was that we created a sales order, then we created delivery, then we created customer invoicing, and then we saw that SAP automatically create a service contract and automatically create an equipment card. So that basically means service contract and equipment card get created automatically. Then we basically created the equipment card, and then we verify what kind of information we have, and then we look at the service contract, what kind of information we have into that. Yeah, so talk to Deepti and Sai, Ajit, so they can start your process. Okay. Good evening, Manjay Roy. And then we also did yesterday, we created service call for them, and we also look at some service reports, service monitor, etc. So this is all what we did yesterday's discussions and topic. Now today we will be starting a separate and new PDF. So today we're going to talk about accounting. Now the good thing is that during course of our sales discussion, purchase discussion, production discussion, inventory discussion, different good moments and all that, we have seen, we have reviewed, and we have done lot of those accounting entries. Like I have mentioned that multiple times, that integration with the finance is important. So we have worked, people. So that basically means so that is what we're going to discuss in this unit. So in this unit, first and foremost, we're going to unit number 1, 2, 3, 4, 5, 6, 7. This PDF is entirely exclusively focused around finance. Okay. Okay. So and that is what we're going to discuss: cost accounting, fixed asset. So there is a fixed asset module also we'll talk about, and we'll take an example of that. Controlling. So there is a cost controlling and all that. We'll talk about that as well. There is a banking process. We'll talk about that as well. Financial process, financial accounting basics. So all those different processes we will be discussing in this topic. The good news is, in the last PDF, we had more than 650 pages. We have only 287. The good news, we have a half of the page, but still we have to go through all these different units, financial basics, So we're going to talk about some general financial accounting conventions. As I mentioned to you, if you wanted to become a SAP consultant, you cannot become a SAP consultant unless you understand the integration. So integration of sales and purchase and inventory, production with the finance and how the finance integrates. So understanding those integration among the various functions, various modules is very, very, you know, so that is a general accounting, and you know, so that is where so that is the different accounting convention. So we're gonna talk about accountant Maria and all that. That's fine. Business scenario. Now this slide, which is attached to your screen, is very, very important. You know. So what is this slide basically means? This slide basically means, now this is very, I like this slide a lot actually. And I'm seeing this slide for many, many years now. This shows actually the SAP architecture, whether it's a business one or any, you know. What does this basically mean? That on the top layer is the master data. Yeah. Okay. So that basically means we have this master data. Now, what is the master data? See this word here, master data. Now, what is the master data? Customer, master data. Vendor, master data. Item, master data. We're going to talk about GL and account, master data. These are all different master data, because all the entire process is taking place, happening for these master data, around these master data, for these master data. I'm doing a sales for a customer. I'm purchasing from a vendor. I'm buying an item. I'm selling an item. I'm producing an item. Then in between, we have all these different processes. So purchasing, we talked about. Inbound logistics, receipt and all that, we talked about. Warehouse management, we created, and creating the bins and all that, we talked about. Production process, we talked about. Outbound process basically means when you create a delivery to the customer, that is outbound process. Then marketing, sales, we talked about, in which we created, you know, sales agreement, sales contract and all that, and sales orders and all these different customer returns and all that. And then yesterday, we talked about service. So service was the last process in this logistic which we discussed yesterday. So these are all different processes which you have discussed, and this is how they are all connected. It's a very important integration diagram. But the foundation, everything goes back in the bottom to the finance. And we saw that. Everything goes back to the finance. Sales, purchase, inventory, everything goes back to the finance. The finance accounting. That is what we see here. Okay. And that is what we have been discussing all along. Okay. So this is the example of a financial basics. Now, another thing which we discussed, if you make a note of this, automatic general entries. We did that. This is sales cycle. We did this sales cycle in which we create a sales quotation, we create a sales order, we create delivery, AR invoice, incoming payments, etc. We did all this cycle. And if you remember, in this cycle which we were doing, you know, when we're talking about the sales, and one of the things which I have in this whole cycle, in several days, etc., is that here? we talk about every place. We have discussed how the integration happens. See that here? How the integration happens. We talked about debit, credit, debit, credit, debit, credit, debit, credit. And in sales cycle, in purchase cycle, in perpetual inventory, non-perpetual inventory, moving average price, the standard price, all these different exercises which we did in the last class. Then we did purchasing and we did sales. Okay? So all those different, and we're going to do it again in the whole automatic journey. This is important because a lot of these journal entries happen automatically. And we did that exercise. We're going to do this again. Now what happens is, in quotation, there is no journal entry. In the sales order, there is no journal entry. When we're creating a delivery document, this is the delivery. So when I'm creating a delivery document, okay, this is a sales quotation, then we have a sales order. Then at the time of delivery, now look at this end-to-end diagram. So when we create a delivery, at the time there is a journal entry. We saw that. When we create a customer invoice, okay. So delivery, there is a journal entry. AR invoice, there is a journal entry. Incoming payment, there is a journal entry. Deposit, when we make a deposit with the bank, there is a journal entry. Okay. So that is basically, this is all journal entry. And we did that. No sound out. Good evening. Is my voice coming to you all? Can you hear my voice? Oh. Gagan can do. Okay. Krati, can you hear me now? Amik can do. Voice is clear. Okay. Breaking in between means I don't talk all the time. Breaking doesn't mean that I'm not talking at that moment. It means I'm a human. I have to also, I talk, I stop, right? What is sales quotation? Is it a purchase order of the other party, customer? No. That is sales order. We talked about that. Sales quotation is when customer calls me and they ask me that, okay, what is this item cost? We submit a quotation to the customer. And on the basis of quotation, customer approves, customer decide to purchase, and when they decide to purchase, then they place an order to us, and then we get a sales order. So sales quotation is, so Sikhar, you are not reading anything. So that basically means all these PDF which I have given to you all, you start reading it. That question suggests me that you have not read anything, because we did this exercise many times. Because we did whole sales cycle, right? So if we go back and in this, when we are doing a sales and all that, we did whole sales cycle. We did a whole purchase cycle, and we talked about that multiple times. So you remember we created sales order and different kind of sales order, redelivery, this and that and all that. So Remember, we did whole end-to-end sales cycle. We did all these transactions. That basically means that question suggests me that you're not reading anything, which is very, very concerning. Okay. 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 So sales quotation, when customer calls us, they need a material. At that time, we create a quotation. Then we create a sales order on the basis of that. Now, look at this screen. What does this say? Now look at here, AR invoice journal entry. This cycle we did, and we're going to do it again. Now let's understand what is this sales cycle basically means. So with this basically means that customer calls us and asks for a quotation. We submit a quotation to the customer. On the basis of quotation, we create a sales order. Based upon sales order, we create a delivery. Based upon delivery, we create a AR invoice or customer invoice. Quotation, then sales order, then delivery, then invoice. Now, what does this basically mean? Look at here. It says, at the time of customer invoice, AR means account receivable invoice. We do journal entry. This is where the journal entry happens. Debit and credit. Okay. Now, we're going to talk about what is this debit and credit basically means. Let's do the sales cycle again. So let's say I do a sales cycle. We did that before. We are doing it again. In sales cycle, what is happening? We create a sales quote. We created, this is actually a repeat. What this we already did, but that is fine. So we're going to do delivery. Then we're going to create AR invoice. So this is what. Now we go to sales quotation. We close this. Then we go to sales quotation. We select our customer. Any other customer, doesn't make a difference. Okay. So what does this basically mean? Then we have I select any item. Now this item, just one piece. What you can take whatever quantity you want, doesn't make a difference. So this is one piece. The unit price is 27,000. So whatever list price we have maintained. So this is 27,000. Open quantity 1 because this is a quotation. In the stock, I have a 1,225, so I have enough. Committed is a 578, so that basically means I have a previous sales order, so 578. Ordered is 558. That basically means I have open purchase orders for this item for the quantity of 558. Open quantity is stock quantity, committed quantity, ordered quantity. Okay, I added. We get a sales quotation. If I right click here, there is no journal entry here. So if you see, at the time of, if you go back to the last slide, at the time of quotation, no journal entry. At the time of sales order, no journal entry. Let's go back there. Sales quotation, no journal entry. Sales order, no journal entry. Delivery, yes. AR, yes. Incoming invoice, yes. Deposit, yes. So we go back sales order, then we go to delivery. This is a delivery document. Oh, did we create sales order? No. Sales quotation. Let's create a sales order first. We'll create a sales order first. This is a sales order. Enter the delivery date, and then we add, and then we sell. Okay. Now what we did? We add. What we did? So we create a sales quotation, we create a sales order. Now in the sales order also, if you right click, there is no general entry. If I go copy to, and I go to delivery tab here. So this is the delivery tab. In the delivery tab, we have a delivery customer number 300, microchips, customer number, quantity 1, this price, this unit price, and then we set it. We did delivery now. Now we do relationship map. We get quotation, we get sales order, we get delivery. Now here in the quotation, if I right click, now I have a general entry. Okay. Now we have a general entry. Okay. Now I want to, so this was my delivery document. I open my delivery document, and in the last step in the sales cycle is creating AR invoice. So I go in the bottom, I create AR invoice. I select my customer, item number, quantity, price, discount, and then I add and save. We enter the tax. We enter the tax. It's the same sales cycle, nothing different about it. It's basically we have done multiple times. The important thing is entries. We go to relationship map, quotation, sales order, delivery, AR invoice. Okay. Close it. Now in the AR invoice, we have a general entry. See here, look at carefully. There is a general entry here. Now this is what the general entry we see here. Now see. Go back to the next page. Now what will this next page tells me? So this next page tells me that at the time of AR invoice, my customer account is debited. So if you see here, my customer account, my microchips is my customer, and that is the 24,591.20 rupees. And for that, this customer has been debited. Customer get debited. Customer get debited. My tax account, credit. Revenue account, credit. You see here, so my CST payable, credit 961.20. We have a sales revenue account, debited 24. Now, how this account is getting determined, that we're going to talk in next topic. So in the sales revenue, we have account is 40000. Now, from where we got this? For the tax payable, we have account 2071030. How we got it? We're going to talk about it. For the customer is their microchips, which is customer C3000. Okay. So that is what we are seeing here. So it's debit and credit. Debit and credit. So these are the, now these journal entry happens automatically. There's a automatic entry. The most important part is these entries are happening automatically. Okay. That is what this basically means, automatic account entry. There is something called account balance. For every customer, you can get the total balance in. There are many reports available actually. Account balance. You can pull different reports. There are different ways to do this. If you look at the customer here, if I click on this yellow sign, now see here. In the account customer itself, we get an account balance. This is my account balance. This is my account balance. We see here, we can get account balance. We have here account balance. In account balance, this is the total account balance. Now, if you see this customer, that many, this is the amount of deliveries. For this customer, this is the amount of orders. For this many amount of opportunity. If I go back to the account balance, if you click on this button here, you get the detail, invoice by document, sales employee, posting date, due date, customer name, sales amount, and you'll even get a gross profit by invoice. These are all different invoices. This is the total sales amount. And this is basically by a invoice. Is it gross profit percentage? If I see this, and we can even go by posting date. If you go to posting date in the bottom, this is the one we did today, 10/20. Remember? And this invoice was for 24,030. This is what we did today. And the interesting fact is the profitability. If you see here, the profit is 47.52%. So this is the profit. So we get 47.52% profit. Okay. Voice problem. What is the voice problem? Can you guys hear my voice? Is my voice coming to you? No voice issues, sir. Okay. So this may be his personal issues. How will get the statement of this customer invoicing, including bills and payment receipt? No, you can get a payment receipt. There is various other. This is just in the balance. There are many reports. There are many reports. If you go back here in the finance, there are many reports. This is just one of them. If we go back, so there are different sales reports. You can do sales analysis. And if you go to finance, and then here in the finance, we have different other reports. Customer aging, vendor liability, transaction journal, at the GL level. So there are many different reports which are available for different purposes. This is just one of them. We were just looking at account balance report. Account type. Account type. So all accounts are fundamentally divided into broad two categories. Either balance sheet account, profit and loss account. Now, where do we define all this? So there's assets, liabilities, equity capital, expenses, revenue. Now, that is part of our chart of account. We see that here in the finance, there is a chart of account. If you see the chart of account, this is where you define different buckets. You have assets, liability, equity, revenue, expenditures, and you can go to the 10 buckets, 10 drawers. If you click on the assets, these are all asset accounts. If you go to liability, these are liability accounts. If you go to expenditure, these are expenditure accounts. And this expenditure, you can have different expenses. I have electricity bill. What is my water expenses? What is my gas expenses? What is my telephone expenses? My property rent? Whatever junk. What I'm going for my vehicle repair and servicing. these are the different classifications of different items. And here we can have a different account type. This is a different account type. This is assets. If you go to asset, and these are different kind of assets. I have office equipment. I have a furniture. And for each of them, you can also get their balances also. Yeah? There's a balance by account. If I want to do furniture and fitting, I want to see the account. You can see that. So what we are saying here is that you can have a different kind of accounts. Asset account, liability account, equity account. What is assets? So for example, you have a office, it's assets. You have a furniture, it's assets. What is liability? You have a expense, your payment to the supplier, that's a liability. What kind of equity you have? Capital, cash on hand. And that is part of the balance sheet. That is called as a part of the balance sheet accounts. Then you might have a different kind of expenses. Expenses could be whatever. That expenses is part of profit loss accounts. Then you have a different revenues. And these different revenues are part of profit and loss accounts. Okay? So that is what these different account types basically mean. Now we saw that at the time of year invoice, when we do year invoice, my customer get debited, my revenue get credited. That was the last entity, that is the last activity we did. If I go back to my customer invoice, so if I go to my customer invoice, if I go to my previous record, this was my previous record. If I go to journal entry, so my customer, this is my journal entry. In the journal entry, my customer microchips is debited. My sales revenue credited. That is what we see here. Now, how these accounts get determined, that we're going to talk in the next chapter. Because there's another thing is like, okay, this is a customer account. So C3000 is a customer account, but for sales revenue, we have account 40000. Okay. So how does this account get updated? So how does the sales revenue account get updated? How we got that? So there is something called account determination process. So we'll talk about that account determination process. So that is part of our another discussion. So we have all these different accounts. So we have a customer account debited, revenue account credited. That is what happened at the time of year invoice. And there is a third account also. If it's the tax account also gets credited. We did that many times. So we talked about that there are different GL. There's a different type of general ledgers, which is part of a chart of account. You can have a different two broad categories, balance sheet category and the P&L category. Within the P&L, you can have expense account, you can have revenue account. Within balance sheet, you can have your assets and liabilities and equities. And you can have many other brackets. That is part of your chart of account definition. Chart of account can also be country specific. So where is the chart of account? This is your chart of account. So you go to chart of account, here this is chart of account. Asset, liability, equity, revenue, expenditure, number 6, number 1, 7, 8, 9, 10. That basically means most people use only 1, 2, 3, 4, 5 buckets. But apart from these 5 buckets, you have 5 more. So if you want to have a further classification of his general ledger based upon your requirement, you can further do it. Not many people do, but if you want to, you can. You have a choice. But these 5: asset bucket, liabilities, equity, revenue, expenditure. In most companies, these 5 categories are prerequisite and mandatory. But apart from that, if you see this number 6, number 7, number 8, number 9, number 10, so these are total of 10 drawers. So 5 are these. You have 5 more. You can classify further GL into those 5 as well. That is what we see here. Okay. So we talked about different general ledger. We saw the posting. Now we're going to talk about something called automatic general entry. So in the last exercise, what happened was that when we create an AR invoice, at the time of AR invoice, system automatically update and system automatically do my automatic general entry. Okay? So automatic general entry happens automatically. Now, how does these different general entry happen? So there is something called, and we looked at it before. Look at it here. Automatic general entry during sales, purchase, inventory processes. When we did purchasing, we talked about. When we did sales, we talked about. When we did the inventory movement, good receipt, good issue, we talked about. We talk more. Then we're going to talk about what is the process of automatic account entry. Automatic account entry. So what is this basically means? So that basically means if I go back to my customer invoice, so this is my AR invoice or customer invoice. So if I go to my previous record, and if I see general entry, this is sales revenue account, how do we got it? This is my CST tax account, how do we got it? And then this account entry is also taking place at the time of delivery also. If I go to the delivery process, then in the delivery process, again there is a general entry. And if you look at carefully, here my stock account is credited. Now this stock account is 1300, how do we got it? Then there is a cost of finished goods sold, 50025, how do we got it? Okay. That is what we are trying to understand and we are trying to learn as a part of this. In SAP, does the GL code for any account, say furniture, are same for every company or different from company to company? No, every company has their own account. You mean say customer to customer of SAP? Is that your question? No, everybody have their own GL. So at the time of implementation, they use their own GL. So your question is basically that if I go to revenue here, so if my revenue account is 4000, so is every company going to use this 40000? That's your question, correct? Because this 4000 is a account for sales revenue. Yeah, no. See, these accounts, yeah, this is, I got it now. See, these accounts, okay, so these accounts 4000 is just an example. It's just an example. Yeah. Now, you don't need to so this is just an example. Every company normally every company have their own chart of account. So they give it to us. So they will give it to you as an implemented company. So they may not necessarily have this 40000. They might have some number. So same thing for customers also. Same thing for the material also. Same thing for vendor numbers also. Same for the, because GL is a master data. So GL master data ID may not necessarily be same for all customers. Every customer normally will have their own GL IDs, their own customer numbers, their own vendor numbers, their own item numbers. Now, having said that, if somebody want to use SAP provided, they can use it. So there is no difference in it. Okay. No voice. Well, you got my point? Okay. Okay. So that is what this basically all means. You got it? Okay. Wonderful. This is done. Even for customer also, see this customer number is C3000. It's not necessary at all that that customer will have the same number. They will have their own number in most cases. Okay. Okay. So how does SAP Business One handle the financial accounting processes, and how does the system okay? So here there is something called which account to use automatically. Look at this word, which account to use automatically. So we have a delivery, customer invoice, incoming payment, deposit. So there is something called GL account determination. So somewhere there is a process of GL account determination. There is also a process of control account. So there is something called GL account determination. And then there is a process that is called control account. I would like you guys to take a pen and paper and make a note of these two lines in the bottom, which I highlighted. Control account that links the business partner subledger account to general ledger. Make a note of that statement. Make a note of that statement. Some people also call this as a reconciliation account also. Some people also call this as a reconciliation account as well. So some people call it as a reconciliation account also. So I would like to make a note of this, something called control account. So here, look at my screen. So there is a customer. So there is a customer. in the customer, and if I go back here in accounting tab, this is the customer master, and we have here something called, you see that, control account, and there's account receivable 140000, trade debtor domestic. Now this account is associated to this customer. This is called control account. This is also called reconciliation account. This is subledger. So that basically means when we say that this customer C000 has the account balance of this 13 million, this somewhere this 13 billion get entered. That 13 billion also get entered in this account receivable and trade debtor account as well. So there is something called reconciliation account. We will talk more on this as well. Then there is something called account determination. Account determination basically means, if you go back, as I discussed before, how the system found for sales revenue this account 4000, how the system find for my tax account 207130. So how does these accounts got determined? On what basis? So that is what we are talking about here. How does account determination happen? It's a very, very simple process. This is very, very simple process. Okay. Now, what is the basic meaning of this? There is something called traditional solution. So there is something called traditional solution, and then there is something called advanced GL account determination. Look at this picture. This is important. It's very simple, but important slide. So how the GL account determination takes place? That is what we are investigating. That is what we are trying to understand. The traditional solution is default GL method in an item. That basically means in the item we have a GL method. Now where it is? We go to items, we close this, and this is my item A001. So I go to A001 item, I go to inventory data, and here we have a set GL account by. And I go to this drop down, and in this drop down I have three choices. You can set up GL account by warehouse, by item group, or by item. There are three choices. We have three choices. Default GL account for the item. Then there is also something called advanced GL account determination as well. This advanced account determination is part of setup finances. Now, where is that? We close this windows. We close all this. And then we go to part of admin. In the admin, we go as a part of setup financials. And here we have a GL account determination. And then we go to GL account determination here. And this is the GL account determination. These are different GL accounts. See that the revenue account is 40000. If I go back here, if you go to journal entry, revenue account 40000. I close this. I go to account determination window. This is my account determination window. In this window, my revenue account is 4000. Similarly, there is a purchase account. There is a tax account. These are different tax accounts. So, sales account, purchase account, general expenses, inventory, resources, work in progress. Now, one more thing which I want to talk. If you go back here, we go to item here. In the item, what is the inventory method? It's a warehouse. What does this basically mean? So it's a GL method is warehouse. So what does that basically mean? We talked about that before, if you remember. Many years back, when we're talking about warehouse and inventory processes, remember? Many years back, when we were a young child, we were talking about that process. So we go to general data, general warehouse. And remember, we were talking about how we configure warehouse as well. And here we go to accounting. And then we have all these different accounts here as well. Now, these are the accounts which are defined at a warehouse level. My revenue account is 40000. That is how you have multiple different choices to do account determination automatically in the SAP system. That is what we have it here. Now look at the account sales. So there is a warehouse. Then there is also item group. There is also item label. Now what is item group? We talked about that also. Remember, many years back when we were talking item inventory management. Item group also you can define. Accounts also say multiple choices to do, multiple ways to do. Okay. So here also sales revenue account 40000. So you have a choice. You want to do by warehouse. You want to do by item group. You want to do by item. You want to do automatic account determination by advanced account determination. So this is, I close this and I close this, and this is my advanced account determination. This is what we see here. So we have a multiple choices. There are two options for account determination. In traditional solution system, look for the default account based in the item master. Remember, I mentioned to you in item master, 3 choices: by warehouse, by item group, by item. If not, you can go to advanced account determination solution. So you have both choices. We'll talk about that more. Okay. Now we are talking about something else. These codes is auto-generated by which code you're talking about? Which code? You're talking about this GL codes? No, we talked about that before, right? These are just an example of codes. You can have whatever code you want. This code 000. Remember, we discussed long time. Guys have to start paying attention. Listen to every word which I'm saying. All these codes, general codes, item code, customer code, vendor code, they are just example. Can you use the same code? Yes. But normally, for every customer, people have their own codes. They will have their own GL codes. They will have their own item codes. They will have their own customer codes. They will have their own vendor codes. So normally, people will have their own codes. They are just example in my system, in the training system. So I'm using training systems. So in that, this is just an example. Now, we talked about something. You got the point? Okay, wonderful. But pay attention closely. Otherwise, कारवां चला जाएगा, गुबार देखते रहेंगे आप. So control account, link between कारवां चला गया, गुबार देखते रहे. So I mentioned to you, everyone, read. Then read. When you're becoming SAP consultant, like anything in the life, nothing is simple. Everything takes time. Link between business partner sub-ledger and general ledger. Control. I would like you guys to make a note of that term. Make a note of this term. Okay? Make a note of that term. Account receivable equals to control account. And make a note of that term. Link between BP sub-ledger and general ledger. Make a note of that term. I will also like you guys to make a note of this bullet point which I highlighted. So remember, I highlighted this. Make a note of that as well. It's an interesting concept. Now, what is this concept tells me? When you post a document to a business partner, for example, you're posting a customer invoice. Then what does the system do? Business partner master data account balance goes up. Remember, we talk about account balance. Account balance basically means for this customer, what is the balance? For this customer, what is the balance? For this customer, what is the balance? You could have many customers. Every customer, you have a balance. This customer has a balance of 10,000. This vendor, this customer has a balance of 25,000. This customer has a balance of 50,000. Every customer, there could be a different account balance, which is the balance of that customer is supposed to pay us. So that is an example of account balance. Then we have also something called control account balance. So simultaneously, when we make a balance of the business partner, system also make an entry to control account as well. In the third bullet point, make a note of third bullet point. You cannot post journal entry directly to the control account. Control account cannot be maintained manually. They ought get only updated indirectly. So direct manual update the control account is not possible. Make a note of these 3 bullet points. Take pen and paper. This is important concepts. Okay. So this is my customer C30000. If I go to this customer, if I go to accounting, and I have here 140000. This is an example of a control account. This is a GL account. This is a subledger. This is a reconciliation account assigned to this customer. And if I go back here, this is my trade debitor. You can have a different reconciliation account. If you go back to and here you see that there is a checkbox here. This checkbox basically means this is a control account. You see the checkbox? This is control account. And if you go back here, 53, this is the balance in this account. This account can be assigned to multiple vendors, multiple customers. So for example, if you look at this example here, it's a trade debitor domestic, trade debtor government, trade debtor foreign. Now what is the basically meaning of that is? Trade debitor domestic basically means, let's say I have a 500 customer in India. So this is my domestic customers. Then I want a separate bracket for my customer, which is government customer, because we are working with the government also. So we can have a trade debitor customer which is in the government bracket. Then we have a trade debitor foreign. That basically means I'm also exporter of the goods. So you can have a 3 accounts. So 1400 is for my domestic sale, 140010 is for my government sale, and 140030 is for my foreign sale. So that basically means I have a total sale of 50 million, and I have let's put in 20 crores. If I have a 20 crore sales, I will say out of 20 crores, I have a 12 crore domestic, and I have a 7 crore government, and I have a 3 crore sale to the foreign market. If you go back here, trade debitor domestic, if you go to balance, and if you click on it, these are the different balances. Now we see here, this which is highlighted. So this was the invoice we did today. So 10/20, October 2020. This is my transaction number 4551. origin number 645. So look at it here. So let me close this, close this, close this. This is my customer invoice. Yeah. In this customer invoice, after the discount is 24,330. And you see here 24,991 and 20. Now this entry automatically happen in this control account or reconciliation account. This happened, origin document is 645. If I go back to my customer invoice, if you go back here, so this is my control account. If I go to AR invoice, my customer invoice number is 645. My customer invoice is 645. This is my customer invoice document. $24,030. And if you see here in control account, 24,991. Which document it is? 645. What is my offset account? This is my revenue account. So this account, and this is my offset account. The revenue was credited. GL account is debited. You see the debit entry. 24,991 and 20. That is what we see here. Bookmark this slide number 20. Understand this. We talked about in the chart of account, we can have a different bracket: assets, liability, capital, reserve, turnover, cost of sale, operating expenses. These are different buckets. If you go back here, if we close it, if you go to chart of account, you can have asset, liability, equity, this, that, different buckets. We can have a different bucket. We can have chart of account, which is balance sheet account, and we talked about before, and we can have P&L account. We talked about that at the time of AR invoice, or if AR invoice is just an example, the same thing apply other places too. Same at the time of vendor invoice. So what is we are talking about in the customer invoice applied to the vendor invoice also. Concept remains same on both sides. So that is example of automatic journal entry. How the system calculate the value? So it's a simple quantity multiplied by, So we see that how the system determine the price. So basically, system take unit price multiplied by quantity. If there is any discount, that become my net. So unit price multiplied by quantity, that become my discount. That's what it means. So that is how system calculate my total sales value. Same thing on the purchasing side. So whatever your unit price, so if you see that, that's my total value. So what is my unit price multiplied by quantity, that becomes total value. If there is any discount, then we deduct the discounts. Same calculation sales side, same on the purchase side. Same thing, how does the system calculate during at the time of inventory? You take a unit price multiplied by the quantity, that becomes a total value. If I'm doing good receipt, if I'm doing good issue, so unit price multiplied by quantity. We did that. Summary. Okay. I have a good news. I have a good news. समाचार समाप्त हुए। आकाशवाणी की विज्ञापन प्रसारण सेवा का ये दिल्ली केंद्र है। सुबह के 8 बजे हैं। अब आप रमन प्रसाद सिंह से समाचार सुनिए। Wonderful. News is over. Thank you. Thank you all. Talk to you tomorrow. We'll continue where we end today. Good night.